I think for investors, in periods of high volatility like we're experiencing now, there's a tendency to focus on what can go wrong. Even though we've already seen a large correction in prices, credit spreads gap out. And it's actually in those moments you want to say to yourself, counterintuitively, well, now that I've dropped a hair, what could go right? I would say I would expect some slowing to occur in the economy just given what's been added to the system. It's also going to be a challenging period for markets because markets like certainty. They like to understand where things are going. Right now, with the tariff diplomacy, it's hard to see that. That being said, what we have here, I don't think is structural in nature. It's not COVID where we shut down the global economy. It's not the GFC where we had enormous amounts of excess leverage in the system. The tariff diplomacy can settle, right? There's a path out. The faster we get to that, the quicker I think the economy and markets can snap back. The number one thing about a period of dislocation as it relates to private equity is there's a repricing that often happens. There may be a company on the screen that you were looking to privatize. Now it's trading 15% cheaper than it was before. So buying it becomes more attractive. At the same time, there are participants who need to raise liquidity, and so they need certainty to execute a sale. And so your capital becomes more precious. Real estate is a very simple business. It's determined by supply and demand and the cost of capital. And the good news is new supply is down dramatically from where it was a few years ago. And interestingly, these tariffs will mean it's even more expensive to build, so there'll be less new supply. In addition, the cost of capital, which went way up back in the fall of 23, that's all come down. And so you've got a combination of what should be healthy fundamentals and a sharp fall in cost of capital, and that's what's going to drive the real estate recovery. I think credit is a very interesting way to play a challenging macro environment, because if you think about what we do in direct lending, we're senior in the capital stack, which means there's a lot of equity behind you as a cushion, and we're taking the investor's capital and bringing it right up to the borrowers. And so the combination of seniority and farm to table, to me, makes this a very interesting asset class, particularly in this moment of uncertainty. I think investors, in the midst of the volatility we're experiencing now, have to remember that we're on the cusp of a technological revolution, that AI is going to fundamentally reinvent our lives. The opportunities around that, the infrastructure, the power, all sorts of businesses that support that transformation. Don't forget that's out in the distance, even though near term it's a little bit cloudy. And so as an investor, peek your head out. Don't just focus on what's right in front of you. There's still opportunity. That's how we look at things here at 345 Park Avenue in Blackstone.